Welcome back to another Stock Market Open live stream. We are starting a little bit later today, but we have made it. Take a look at this. The Qs are up 39 basis points just as Bitcoin's sitting at that 57.5 line. If you don't have it written down yet, write it down. 57.580. It's pretty important. We like to hang out there. We like to bounce there. It's a line that matters. If you think TA doesn't matter, what the hell is going on this minute chart? Why is it that when Bitcoin comes back to life, it just comes to hang out at that minute chart? Oh my goodness, it must just be a coinkydink. Anyway, this is a fib level right here, 57.580. We are sitting at 58K right now. You've got the Qs up about 39 basis points. Tesla up about 29. It did close yesterday above 260. Now, this is a big deal. Closing above 260 is a big deal because it clears the path to the next phase, which, quite frankly, is 295. Now, let's be clear. Right now, Tesla's moving on a lot of momentum. It's moving on enthusiasm over the Robotaxi event. We're not going to have this much enthusiasm in Q4 or in Q3 when we're still stuck with interest rates that are relatively high and maybe a slightly weaker economy. So some things to keep in mind, that you might go through a period of euphoria here, which is something to take advantage of. Embraer was up 7.4% yesterday, which is crazy. It was up almost $2 yesterday, and it's up another 185 basis points in the pre-market. It's pretty cool. I like it. I especially like it because I bought more of it just the day before, and then all of a sudden it's like, whoop. Trade desk. This one's sneaking up on folks. I don't think people are really paying attention to the rally in trade desk. Guess what the volatility of this sucker has been for, I don't know, like the last 6 months? Almost nothing. That's because it's just going up. It's pretty incredible. Super low volatility, cheap play to potentially buy if you think it's going to keep going. You got earnings coming up in August on it. It's one to watch. It's one we've been studying. It's one we like a lot, and one we own. All right, let's see movers in the pre-market here. Oh, Carvana. Let's see what the news could be on Carvana. Bond yields, by the way, down about 2 basis points, sitting at 4.28 on the 10-year. Gold still under 2,400, and oil. Where do we sit in oil these days? 81 to 84, 84.55 on the Brent. Very well. Let's see here. Yeah, all futures green. Dow 6 basis points, S&P 24, and Nasdaq 37. All right, very well. So let's see here. Oh, mounting credit card concerns or credit? Yeah, credit cards. What is this?
No, that's absolutely true. If the Fed cuts rates, you would expect to see those rates go down as well.
We gotta go. I'm going to get in more trouble. They sponsors.
Thanks, Leslie.
Thanks, Leslie. Final check on the markets. 78 points now on the Nasdaq. Now the Dow looks like it's going to open in positive territory. You think he could say anything in front of the House that changes things? Maybe,
no.
Right? No?
Yeah, it's possible, but probably not.
I'll miss you tomorrow, but I'll see you Friday.
See you tonight on Fast.
Yeah, dude, that was so tiring yesterday. Are we actually going to stream him again saying the same stuff today or what? I don't know. I mean, I guess if you're trading, you kind of want him on in the background, but goodness gracious.
5 record closes.
That was so boring.
Future suggests the bulls will take aim at a 6th with Powell day 2 on the Hill. More deflation out of China. 2-year yield lowest since March. Our roadmap begins with the records rolling on. S&P and Nasdaq extend to new highs. Tesla targeting its 11th straight daily gain. And Apple tops $3.5 trillion.
Plus chips semi AI boom sector 108 day.
His mic's off.
Taiwan semi giving a bit of a boost as well. And the Paramount Skydance merger deal. Just what is the future of media
They messed up his mic. All right, we'll jump in over here for a minute. So 23andMe was up 5% yesterday. Interesting move there. You had, let's see here, Under Armour down again. Boy, that stock just bleeds. We got about a page of red here in the pre-market. Nvidia coming back for 134 though. Look at that. That's crazy. You're up 2.48 yesterday, 1.99 now. Coins coming up 1%. Enphase keeps moving. There's something going on here at Enphase. Might be a swing trade, but the direction seems to be straight up for that sucker since it hit 95 bucks. It's been straight up. That one in Trade Desk. Where is everyone? Oh, I know. They're already buying it. Okay. Woo. Let's see. Okay. So, what is the news today? YouTube, Google. It's interesting. What is this? YouTube is a $455 billion media giant hiding in plain sight. Investors attach a $2.3 trillion valuation to Alphabet for its status as an internet search behemoth and AI innovator. Yet it downplays YouTube's true worth. According to some analysis, it could be worth $455 billion on its own. It's pretty impressive. So, as a result, they argue YouTube inside, this particular writer argues that YouTube inside of Google is almost like a little value stock inside of Google. That's fair. All right. What else? Let's see here. We'll take a peek. But let's listen in here for a moment.
But a lot of these companies raise price, and frankly, I don't want them.
That's why you've said to be wary of Pepsi ConAgra tomorrow.
I'm very worried about Pepsi because I do think it's GOP-1. No one will ever admit to GOP-1, and yet I watch our network, and there's nothing but ads from companies I've never heard of who've got GOP-1. They can get them because of an FDA exception because you can't get enough Lilly product. So I don't want those stocks. I just don't want a company. I mean, I think ConAgra is a great company, and they did a lot of frozen food. And the Gen Zs, David, they love frozen food. It's that cold aisle, you know. You see it's cold, you open it up, and it goes, and then you try to open up the second one, it won't work.
Yes,
okay,
Jim.
well, I mean, they doubled down.
I have been to the supermarket. Yes, I experienced
Okay,
that.
well, they doubled down on an aisle, which was great. But the aisle that you need to be in, David, is the data center aisle, which is why I like the Honeywell deal this morning.
Buying the LNG business from Air Products.
I'm waiting for what Tom Jordan from Coterra, which I think is the best nat gas company, said would happen, which is that one of these hyperscalers, I call them tech titans. Thank you, Jayshree Ullal, who's just got, I think, an amazing Arista, not the record company, where John Coltrane was on, and Coltrane, son of Christian Mark.
Boring. Okay, on Bitcoin, there's a small little update here. It looks like we've got, in the past hour, the German government has sent another 2,000 BTC to Coinbase, Kraken, and 132 PO. They now have 13,360, or about $800 million remaining, about 26.8% of the Bitcoin originally seized. I just think it's so crazy that such a small amount has been moving this. Yeah, all right.
Delta went vertical in fuel?
Yes, they did. Remember the refinery, the Philly refinery?
So Amazon or Microsoft are going to buy an LNG company?
No, okay.
Come on.
Is it any different than Apple making their own chips?
I'm going to strangle him.
Yeah,
No,
it is different.
Okay, Coterra is a great. Do you remember Cabot?
Well, yeah, I can see the press release. Amazon's buying Coterra this morning.
Okay.
Yeah, they're an LNG company.
All right, I'm not going to talk to you. Your mic's not working. Tom Jordan.
You wish it weren't working.
Yes, Tom Jordan came on Mad Money. That's my show at 6. I know
You
you're
want to
busy.
tell people who Tom Jordan is?
Okay,
Because most people have no idea.
Coterra.
Oh, okay.
Which is the old Cabot Oil and Gas, which is the best natural gas company. They have $1.20 fine. Even at $2.30, they make money.
Yeah.
And he said the hyperscalers are out looking to buy a nat gas company, and they were actually debating whether they should sell to it.
He said that.
He said,
you sure you understood what he was saying? He said a natural gas. This is a exploration company that's finding natural gas, transporting it.
Fussin' wussin'. This is silliness. Let's go somewhere else. Being all fussy-wussy. We want news, not all this complaining. What is this crap? We'll try over here.
Savings rates are going low. Where you're starting to see some consumer delinquencies, wage growth is not improving. So it really is going to be a tale of two cities, and that's why we're very much focused on discriminating and quality, looking at those quality balance sheets, those companies that have a bit of a moat and are geared to those places that are still growing.
How much conviction, Laura, do you have to put money to work at these levels? You're looking at potentially a 37th day of record highs in the S&P 500, and you have to wonder whether it's equities, cash, gold, fixed income. How do you think about allocation overall?
I'd say the first thing is we are still overweight equities, but we're also holding a fair amount of cash to be opportunistic if we do see a pullback. And as you know, we also are holding some gold because we think that that's one of the few.
Everyone's waiting for a pullback, including my mom. Everybody wants a pullback. Couple interesting articles out, by the way. One, American workers have quitting for now. That's an interesting. I like the line, the sentiment there. The job-hopping frenzy of the pandemic years has given way to what some economists are calling the big stay. Yes, the big stay. Americans aren't as restless in their jobs as they were a couple years ago. Numerous surveys show fewer U.S. adults are currently seeking to leave their roles compared with the job-switching frenzy of the pandemic years. Other data suggests job satisfaction is rising, and in interviews, formerly job-hopping workers say they're content with the balance they've struck in positions they have. Applying for jobs right now is like hitting your head against a wall. Copywriter in Los Angeles. Yikes. I think they've probably lost a lot of income from copywriting thanks to ChatGPT. Unfortunately for them. Alright, let's see. Landed her current position in October. Likes that, blah, blah, blah. Changing jobs doesn't pay like it used to. Yeah, look at that gap there at one point. Much larger. Well, it only shows up as about 2.5% here. I think it was much wider than that. I feel like I remember these labor reports coming in, and if you switch your job, it was like, 17% versus, 5% pay bump expected or whatever. Colleen Halloran says her salary, which was less than $50K, was the main reason she left her job. Yeah. The search engine optimization role she landed came with a 66% raise and the ability to work remotely. 66. So she makes like 83-ish now. 83, 84-ish. Working remotely. Raised her salary by nearly a quarter after that. Oh, well, that's great. So now she's probably at like 106. 26-year-old is expecting another big raise this year, too. Oh, that's cool. All right. She looked 26. She's 26. I guess it's the glasses. I thought she was a lot older than 26. This was an interesting one, too. What if Biden stays? This just got posted. Second terms have rarely been successful, blah, blah, blah. But basically, the idea is if Biden stays, we should be careful. I mean, you even had George Stephanopoulos of ABC argue in sort of a leaked video, quote, I don't think he gets served 4 more years. Rip. Yikes. Oh, somebody got a clip of him in New York and then sent it to TMZ. Of course. Because that's the first thing everyone should do. If you get a good clip, send it to TMZ.
In the back half.
All right, so what I think what means is that you have to go back to what Ben Rice just said about how amazingly NVIDIA was not valued correctly by a lot of funds. They had to go buy more in order to have the equality of being to match the S&P, to mirror the S&P. And what's happening is and I mentioned that because there's a leapfrog effect. You know, every time something happens, there's somebody comes out and says, "Well, look, just a second, I've got a new reason." Now, I mean, then I want to go back to 2000. We had new reasons, but there weren't.
Yeah, quote unquote leaked, exactly. Max just mentioned that AMD just announced they're acquiring Silo AI. Silo, this is very interesting. Why? Yeah, let's see. All cash deal valued at $665 million. Yeah. Let's see. AMD to buy Silo AI for capability needed to chase NVIDIA. Oh, ho, 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 ho. Oh, 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 ho, ho. Oh, it is up 2% now. Please, please don't ask. Who sent big alert yesterday for everyone to look into AMD calls? Please don't ask who has over 6 figures in AMD calls right now. But you too could know if you use the coupon code for the courses on building your wealth link down below. Oh, I like this. This is gonna be a good day. Okay, sorry. Where were we? Oh, AMD was going up. That's where we were.
And tariffs. So does everything else go to get shedded?
I'm not buying that. The 10% tariff, I had to deal with that with Constellation Brands because you get.
Oh, boring. Lambo. Oh, a gold member accent. There you go. Okay, we build AI-driven products for your competitive edge. Okay. Like, what do you do? Industry-leading products will be elevated by AI. We'll help you get there. We work with you to build smarter products and businesses. Together, we build and scale AI. What the hell do you do? Scale R&D, customizable AI solutions. I don't really care. What the hell is this? Services are scaling the AI R&D. This is probably what they're interested in. Oh, there's got to be some value here to pay $600 million bucks for that. Scaling. This is like consulting is what it feels like. Company. Get to know us. Building this. Maybe if they're AI consultants and they have all this IP, all this data, they could basically, it's a bunch of PhDs. Oh, they bought a research house. Oh, I see. And they get access to all the talent. See, they could steal all the IP, basically. I mean, they just bought it, so it's not really stealing. But what's interesting about it is, first of all, those icons look like the ghosts in Luigi's Mansion. And second of all, whatever companies these folks work with just gave all their intel, pun intended, maybe, to AMD. Okay. Get in touch. Nah, I don't want to get in touch anymore. Okay. Interesting. All right.
Shari's completely out.
She is. That's true. She will be completely out of it.
You take Diana Olick, she's a little more positive on housing than I am, but in terms of the tightness. But I told David that there was going to be a decline in Manhattan pricing, and he laughed and laughed and laughed.
Yeah, whatever, Jim. So, look, something to just know about AMD is its valuation is about half as rich as Tesla and Nvidia right now. It's lagged behind in the sort of AI race. It just started breaking out of 165. it's got pretty solid cash flow for the situation that it's in. It's got plenty of cash to cover its debts, all of them basically. With when you look at receivables and what they got on their balance sheet and current assets, they've got plenty to cover all their debts and their long terms. And just basically, just quick bottom line, and they can design chips and send them to TSM just like NVIDIA as well. So what they're probably doing is they're probably hiring these PhDs so they can figure out how to make something that's even better than the H100 potentially. Maybe this company's like, oh, we already know how to beat the H100. We already know how to beat Blackwell. You just need to do this, this, and this. And so, I mean, boy, they didn't even go for diversity on their picture. Like, usually, like, companies these days, it's like they purposely try to get, like, every culture and color and religion and everything. These people, I don't think they didn't care. Which whatever. I for me, it doesn't matter. I always look at it anyway. I go hire based on talent and skill. But anyway, the point is, these people together, collectively, they might have had this, sales pitch basically of like, look, we know how to beat NVIDIA. We're PhD researchers. In order for you to design better chips, I mean, think about for a moment what AMD is. AMD is not a, manufacturing company. They're like NVIDIA. These are not manufacturing companies. These are R&D companies and designing companies. They design chips. That's all they do. So, AMD and NVIDIA. So when you look at a company like this, it kind of makes sense that you're trying to hire a bunch of researchers. There are 2 blonde girls out of this whole batch. 1 and 2. That's a dude, I think. That's it. See, that's the thing about, like, some of these businesses. If you're single and looking to mingle, sometimes there's not a lot of choice. But sometimes businesses like this are great if you're married and have kids. No distractions. Anyway, where were we? So, Tesla, 30 bips to the upside. AMD's got about 2% on it. Are you assuming their genders? Hell yeah. When my children came out, I looked right at them. I'm like, I'm assuming your gender too. And you know what? There was not any assuming. It's like, yep, I can tell what you are. You go in the pink bucket. You go in the blue bucket. I didn't even need AI. Okay. Apple, 21 basis points. 38 bases on the Qs. Yeah, no distractions. Yeah, that's the thing about living in Ventura, too. There are very few distractions. See, it's a feature. See, like, the worst thing would be you're, like, married in a place that is, like, swarming with too much temptation or a lot of temptation. You go to, like, I don't know. Like, imagine living right outside of UC Santa Barbara or the University of Florida. That would not be great for some people. Anyway. All right. So where were we? Of course, we were looking at Amazon. Dude, this sucker cannot hold on to 200. And I think Jeff Bezos just dumped a bunch, too. But I don't know how much that matters. Oh, and I just wrote Jezos. Man, that just shows you the morning we got going on here. Amazon stock. Jeff Bezos sells 863.5 million worth of shares. Drop in the bucket. So yeah, he's just on the board now because he quit being CEO because he's like, I gotta be Rocket Man. Ah. Yeah. All right. So what else? Ton of insider selling. Yeah. It always makes you wonder if they see something going on in the economy that other people are missing, you know? I don't know. Uh-huh. Their teachers will choose your kids' genders for them. I don't think that's happening at a Catholic school. Actually, I guess technically it's a Christian school. It's non-denominational. Don't piss people off. I mean, technically, I was baptized, so what? That makes me Protestant? Which is like one side of the umbrella under Christianity, next to Catholic, and then there what like isn't? Then there's like Presbyterian, then there's Pescatarian. Oh wait, no, that's no meat. Anyway, so all right. Come on, Palantir. When do you go to 30? Oh, come on. Look at that. Look at that. It went almost made it to my Fibby. 29.29, baby. 29.29. When Tesla short? 8.9, baby. No, I think if you touch Tesla short before 8.9, you're just playing with fire, but not any kind of fire. You're playing with like the wrath of Israel, okay? And you're Gaza if you're a short seller. Like, no, don't do that until 8.9. The tables turn 8.9. All right. So, all right, this is boring. Come on, I need some entertainment. Tesla, let's go. 40 basis points, you can do better than that. You can do better than that. Don't talk to me about Wyckoff distributions. Wyckoff, you Wyckoff. Wyckoff, your mom. You know, the problem with these, like, complicated patterns and stuff is, you know, most people don't understand complicated patterns, even on Wall Street. So if you look up a Wyckoff distribution... Oh man, I don't know. I feel like it. I honestly I don't even look at that. Like for me, the lines. It's the lines. Maybe some basics in the good old trading view, little MACD manipulators and oscillators and whatever. But trying to place this, I don't know, man. It's almost like looking for a pattern. And I don't know, man. I can't even fit the two blow off the tops in here that you're having on Palantir right now. I mean, maybe the left one, but certainly not the right one don't fit. The right one's right. Nah, I don't know. I don't know. Drunk Kevin channel, subscribe. Hey. What is this? Got coffee here. It's no alcohol. Okay, so what was Jim saying?
Well, advertising. By the way, now it's moved to Prime, too. I've been watching the show. Now I got ads.
David, you got to click and get rid of the. I had ads in the Bear,
Can you get
and I'm
rid
like,
of
I told my wife, this isn't grounds for divorce.
Yeah, I pay for
it's like the bacon
no
ad
ads.
from
But I guess Prime, I'm not paying for no ads. What do I have to pay extra to?
Just hit some buttons, will you? But anyway, Walmart is just David. Amazon, the advertising tier. It's like the Netflix tier. You can't.
Right. And to your point, there's an opportunity for Walmart to start to garner.
Right. Young people don't mind watching ads. Elderly people
the display
think it's
of
a sin.
items on the website.
Right.
Well, family, don't forget.
Lauren yesterday was making sure to remind me to always start the kids young. Oh, it cuts off. There it is.
Walking the Street Open Bell podcast. By the way, Skydance CEO David Ellison, Redbird Capital founder Jerry Cardinal, coming up top of the hour.
We had a lot of Nerf gun battles yesterday. Max was one of the contenders as he's squishing one of the babies. Looks like Violet. It's actually kind of hard sometimes to figure out who's who. They start blending together. There's so many of them. Oh, that's a lot of babies. This is like, look at that. When they're all on the mat together, it's crazy. You can see their size differences there. The bottom three were all in one womb. How is that possible? I don't know. I think that's why Summer on the right is the tiny one. And then you got Ella and Claire up there. They actually sit. And the one on the left up there, she's got a built-in pacifier. Anyway. All right. Oh, come on, AMD. Keep it up, you weenie baby. What is this trash? I got 6 figures of call options here. Thank you. Come on. You think I want to see red candles here? Come on. I don't care what the news is. Actually, it is kind of cool, the whole research firm. Buy AMD. Okay, no. Not personalized financial advice. No. We need buttons. We need to, okay. Spawn in the Halo guy.
This is not personalized financial advice. Past performance does not guarantee, promise, or imply future returns. Don't sue me, bro. Evaluate your own suitability. Coupon code expiring soon. Link below. Nice PP.
All right. There. Okay, so where were we? We need more coffee is what we need. All right. So, oh no. No. Somebody just wrote in the channel, this channel sucks. And their name is Dung Schlung. I would hate for my schlung to have dung on it. You gotta clean that thing up, man. You gotta clean it up. It's nasty. Okay, Tesla, what is this? Red candle, trying to go into the open here. It's over 260. The direction is to 295. Simple. It's not that hard. Go up, not down. Didn't get more coffee. I wanted to get more coffee, but then frickin' dung schlung had to be a little dung. Whatever. Ay. It's already that time again, too. What is this? It's too fast. Well, today we're 20 seconds away from the bell as we're waiting for Tesla, sitting at only 12 basis points at the open right now. AMD sitting at 159 on the research firm acquisition, 58K on the BT sizzle, and Nvidia looks like it wants to rocket. Let's listen in to Jimbo as they ring the bell.
Navigated through E. coli and novovirus. The stock went from 14.5 to 7. Now you do have a 50-for-1 split. So you're another pick. I think he navigated through females to Brian Nickel, and he's hardly sold Chipotle. I wish him good luck yesterday. He said, don't worry, he's still going to be there for a while. But wow, this guy is a Titan CFO. We don't talk about CFOs enough. Rich Galanti, Costco, Titan CFO. These people really are Annette Ashkenazi, Lily to Google. Amazing. And Jack Hartung may be the king. I love it.
That's after Rich Galanti at Costco and now Hartung at Chipotle.
Rich Galanti.
Legendary financial
Rich
officers.
Galanti, when he does his, I'm going to miss his conference
calls. What are they
calls.
talking about? What are you saying? Oh, red candle on the Tesla. No. That's all right. Volatility in the first minutes to be expected. You got Powell coming today, and you're going to have some CPI fears today. I'm not highly worried about the CPI reports, though a lot of people are like, oh, I got a hedge going into CPI. I'm like, what, you little weenie? You actually think it... yeah. Okay. Okay, let's see. Now all of a sudden the Qs already want to move up. You've got, oh, dude, nice. That's awesome. I literally just sent an alert, buying that open dip there on Tesla. I think it's going to 295. What the hell, AMD? Let's go. So I don't want this red candle. What is this crap? Go the other way. That way. It'll be fine. Cute. It could be some nervousness because of Powell. Could be. Ooh, look at Apple. Apple. So juicy. So juice. Love that one. Okay, what else? Qs. The thing about Tesla is I was going to buy it at open either way. I made a bet because I have a bunch of Tesla contracts. Basically, the basic gist of the bet was if I didn't buy Tesla contracts at the open, some of them at least, a certain amount, I would have been a little baby. I would have been a little bitch. So, I had to do it. But it's okay. Okay. Somebody says GME poppin'. What's it poppin'? Like popcorn? Hey, holy crap, it is moving! That's good. Where's the... Ooh, look at that. GME, it's a GME day. You know what that means? Robin the Hood's probably gonna go up. Where's Hood? Robin the Hood. Okay, so Robin Hood, mind you, very frequently plays the following lines. Okay, write them down. I got 2256. I got 2292. Once you get into that 2292, the goal is to get to 2439, and it almost always gets rejected up there. So, yeah, like that's your playground over here. You're at the lowish end of the playground. You know, obviously sometimes it goes down a little lower, but write that down. So I got Hood. See, I actually had to write it down right there. See, I made a bet. I said I would do it. I wrote it down. It's a bet. Okay. Anyway, so Hood. Watch that sucker. All right, what else is going on? Although it's not really waking up yet. It's still sleepy. Okay. I don't know. Apple here just had a little skyrocket. The Qs are being boring. Palantir's given up. Loser. Oh, Tesla's bobbing. Whatever. It's fine. My contracts have time on them. I will continue to buy the dip. Enphase, though. Look at this. Oh, my gosh. Oh, my Enphase calls are kicking butt right now, too. Yeah. This Enphase, if you're not watching to this happening right here, I think you're missing something. It ain't that hard. Okay, here, look. We'll zoom out on the week chart. Oh, my gosh. Get the average candlesticks. Please, there's so much. Who put all this crap here? This looks like just draw a bunch of lines and eventually some of them will work. It would never be like that. But anyway, so you kind of created this little-ish double bottom, but now you're finally getting higher lows on that. I don't know that we go back over here, especially since other interest rate sensitives are actually running now. And I don't know. Personally, I think we're on our way back to the 130s. We'll see. Ooh, GameStop 5%. Let's get out of those average candlesticks. And let's get back to, there we go. Okay, capping out at about 5%. There goes Palantir. Wow, AMD just, it's up 64 bips, but a little slow right now. That's okay. GameStop as well. Okay, come on, Palantir. You can do it. Yeah, even the Qs are a little slow today. Yeah, I can't imagine it's Powell nervousness. Frankly, like Apple running like this is a bit of a sign of like cash desirability. You know, just because they have so much cash. So that doesn't surprise me. Like, think about it. You go into CPI. Are you going to hedge by shorting this market that's rallying like crazy? Or are you just going to go in and buy yourself some good old Apple stock and, you know, let them hold all the cash and let them rally and let them be your hedge? Well, that's kind of my take. 265 is a daily double top from December 2023. Wouldn't a decent retrace be expected here, especially this close to next earnings? Well, it depends. You got a lot of momentum. Volatility is still mid-range. You've got a stock that, you know, people have a lot of hopium over 8.8. And the problem that you face expecting a pullback on this one is if you get any hints from Elon about 8.8 and it's like an enthusiastic hint, it's just going to end up rallying on probably whatever those hints are. So, you know, that's something I pay attention to. But anyway, so let's see here. Let's go jump in over here.
A big position.
He's a remarkable guy. I wish he liked me more.
Although the Bernstein note today on the Paramount pro formas, I think their title is Yuck. That it widely misses consensus. 20% missed a consensus, actually.
Well, it depends. You know, they're talking about pro forma adjusted operating income before depreciation.
Hood's waking up after that GME move. Nice, yep.
26. If you do it off the 26, that number, you get a multiple that's in line or even below a bit's number of the competitors. But
Qs are still slipping. I don't know if it's just part of the morning sell-off.
Coming after you tender your 48% of your Bs, obviously everybody would most likely go for the 15. You know, what is that going to look like in terms of a multiple? And some have been saying, well, it's still above that of Warner Brothers Discovery, which is perhaps the great, you know, the single best peer you want.
Tesla's coming back. Here it comes. Oh, it's coming back violently, baby. It's coming back really violently. Nobody knows violence like Tesla or Enphase. Holy crap, dude. Enphase, another almost 3%. Let's go. That's pretty good. That's pretty dang good. You got Tesla here. Apple slowing a little bit. Trade Desk continues to move. People must just have, like, some level of nervousness over Powell and CPI. But, like, what's he going to say? It's going to be boring. It's all going to be the same crap, just like yesterday. Okay, here's the MO yesterday, all right? You want the script for making money, at least based on what happened yesterday. Hashtag no guarantees. You could lose a lot of money. Okay, the script for making money yesterday was basically you buy the morning dip and then you sell it right about when J. Powell shuts up. So you got about a 2.5 hour hold time there. Okay? That printed money yesterday. Printed, minted. Something to think about. Apple's getting rejected at 230. That actually could be an interesting buying op. Mostly just because if it bounces with Wowie there, that actually could be really interesting. So let me see here. I need to go play with some other. I'm gonna go play with some other toys right now. Yeah. See Tesla. Okay, here. You want to see the other toys? Yeah, see the other toys. The other toys, they look like this. I don't usually put them up on screen because it's just way too complicated. Look at the bands and all the other crap. This is a juicy setup, by the way, on Tesla right here. That's a juicy setup. This is the minute chart. Anyway, and then I want to look at Apple. Yeah. Nice. Not as great as Tesla's, but still pretty decent. All right. Yeah, see? Q's recovering right here. Let's go. Apple, let's go. Okay. And okay. Let's go listen to Jimbo Dimbo.
Nike, David, they didn't raise the dividend. That's actually a 2% yield because the stocks come down. Nike is the poster boy for everything that right now is going wrong. The frugal consumer, China, management being a little bit off, the vault. Years in the vault. How many times I mentioned the vault? Those old shoes that they could bring back, like the ones that are hanging from the wire when you go up. He's laughing.
Meantime, oil below 81.
It's so
going to be the
positive.
lows of the month. And we do have your sound from Coterra Rack.
Okay, no, it's a little attenuated, but yeah, let's just hear that.
Take a listen to this.
Okay.
I am kind of surprised that at a certain point we don't see what I regard as being a deal between a natural gas company and...
Oh, let's go, Tesla. Let's go. Printers are on. Oh, as I say it, it just turns. Oh.
So you don't have to worry about it.
Well, we're looking at that.
Isn't that like the story of like trading? Like as soon as you buy, it plummets. Like I think generally that's the trick. The trick is like you have to put a buy order in because it'll plummet, and then you have to be ready to like buy more because you know as soon as you buy it, you cause it to crash. Like that's always how it is. Oh, AMD's coming back. Let's go. Wow. And I have to move the scale on my chart because Tesla's doing so well. There we go. Okay, now we got AMD's coming up. Enphase doing decently. Super Micro's not really. Super Micro's like bleeding out. I can get them off my list here. Robinhood really tried to bounce there for a moment. And then Apple's still going. Let's go. All right. Sorry. Got a little excited there.
Listen again. I think
I listened. I heard you ask the question, which was, would they contract to buy all the natural gas from a particular company?
Okay,
then he said yes.
It's too Okay, well, I'm just...
That's different than buying...
There's secret cameras watching us. Dude, I'm telling you, man. The worst thing, too, is like in the course member live streams, I feel like when when we live trade, it's like, all right, I'm going to enter right now. Boom. Giant red candle. It's like, okay. One thing I've learned, by the way, over and over and over again, is if you want to stop losing money, stop setting stop losses. How ironic is that? It's like, if you stop setting stop losses, you stop losing money. Take a shot every time I said stop. Ay, ay, ay. Apple, let's go! NATO leaders expected to call a China decisive enabler. Oh, China a decisive enabler against the war. Whatever. Okay. Just bag on China more. All right. Q's going. Palantir's going. Let's go! Oh, everything's just so great. GameStop gave up its rally, but let's put at the top what we got here. We got Apple running. Oh, and there's right again. Oh, AMD's coming back. Yes, very good, very good. Handsome stock. Tesla. Oh, and what else? Hood, not really yet. Marvell. Oh, where are you going, good sir? Where are you trying to go? Nvidia. That's going to bring Super Micro up with it. Enphase. Bouncing on its 100-minute. Trade Desk. Boring. Intel boring. Nike boring. Amazon also boring. SoFi's boring. Coinbase recovering. Yeah. Google. Ooh, it's just all the megas today. Probably find like Microsoft and Meta in here as well. Chipotle. Oh, Chipotle has been bleeding a little bit. Microsoft, wow, 460 now. This sucker was having trouble breaking that 420 to 430 range. Let's just say it has been done. It has been broken. Congratulations, Microsoft. Okay. Oh, no. Wrong way, Tesla. All right, let's keep going over here. What's this?
Talking with some people about what would turn Eli Lilly into an absolute sure.
Don't care. Boring. Next.
Time. This is Bloomberg.
No. You suck. 1, 2. 2 buttons to get away from you to something definitely won't be political.
Slower economy. You get a slower economy, you get 2 rate cuts. If the economy does not slow down,
is this Peter Schiff's dad?
Lucky to get 1 rate cut.
Now, some of the guests on this program who cover the market and who cover the Federal Reserve suggest that the Fed will cut rates before the election because they want to give Biden a better chance of winning. Do you think it is a politicized Federal Reserve?
I don't know about that. Let me put it this way. If they go ahead and cut rates on September 18th, as currently anticipated, that perhaps is not going to provide much of a lift to the economy. My goodness, Fed funds would barely be reduced by 1/4 of a percentage point. Do you think that that's going to matter much? I don't think so, Stu.
Okay.
It's going to take much lower interest rates to really rev up what appears to be a slowing.
AMD 2%, let's go!
1.6 million fewer full-time jobs reported last week, and 1.8 million.
Oh, I forgot to put the coupon banner up. No. There. It's up. The coupon banner's up down below. Price goes up again Friday.
1,000 new jobs. But of that amount, 74%.
You know what's crazy is some people joined that the stocks and psych course back in what was it, 2019 or 2020? It's like 4 or 5 years of alerts and analysis and course member lives. It's kind of cool. Yesterday we did fundies on Trade Desk and AMD. Those were pretty solid. You gotta check out the trade. If you haven't seen it yet, you gotta check out the Trade Desk lecture. It's pretty big. Oh, pump it up, baby. Let's go. Wrong chart. That one. Don't you know? Pump it up. Yes. Yes. Let's go, AMD. It's just getting started. Woo!
Coming up, the president and his inner circle are desperately trying to hide his true mental and physical condition. But the wall of denial they've built around him is just not holding up. That's my take. Top of the hour. Millions of people still don't have power in Texas. Temperatures reaching triple digits. Janice Dean, the full story after this.
Whee! Okay, AMD calls. Print, baby! Let's go! Apple. Come on, baby. You can do it. You broke the 230 order book. Pump it. Yes. Yes. BTC just hanging out over at its line. The Qs are up almost 0.5%. Oh, let's go. 500 on the Qs. Oh, it's happening. Oh, boy. Oh, boy. Oh, it just keeps going. This is crazy. Stop. Stop. Make it stop. It's too much. It's too much. Oh, my gosh. My AMD calls. Yes. Please go in some money. It's gonna go in the money soon. Anyway. All right. So, GameStop second wave. It's like COVID. You get COVID and then you get the Delta wave. Where's the Omicron wave? That one's supposed to be the biggest. That's the new technical analysis we use. Waves of COVID. That's it. Come on, Tesla, you little weenie. Just hanging out over here at your VWAP. So try to combine that from VWAP to VWAP. Oh, Robinhood. Lame. It's okay. Don't have a play for you anyway. Oh. He giveth only to taketh. No. Okay, what else is news? Okay. Oh, no. We're not really gonna watch Powell, are we? And then Powell's coming up. All right, let's see here. Okay, we talked about that. Okay, office real estate's in pain. Okay, well, that's been the story for 2 years. Big deal. It's not news. I want news. I didn't ask for redundant. TSMC sales surge past expectations on AI infrastructure boom. TSMC second quarter sales grew at their fastest pace since 2022, buoyed by an AI boom. Nice. Well, I mean, they're so behind, honestly. Like, they've so much backlog. Oh my God, Tesla, no!
Lost the lead.
No! But AMD, come on, pump it up. Let's go. It keeps going. Folks, for all of you, I introduce the
Nike swoosh.
Oh dear. Okay. Oh, it keeps going. Let's go. Wall Street's finally waking up to aim dizzle. Don't touch my aim dizzle. Oh goodness. Okay. Biden AI standards team. What? A team of lawyers, engineers, and national security experts are leading the Commerce Department's push to drive guardrails for the AI industry. Boring. Very boring. There's no news. Powell ain't gonna make any news. Powell's gonna be boring. Apple shares hit record high. Yes. Yes, they do. They very much do. What else here? Traders see a less than 50% chance of Bank of England rate cut in August. Don't care. Okay. Why the world needs fossil fuels? Boring. This is boring. Nothing. All right.
No harm, no foul. It was like usually they're returning an Amazon pack.
Is this going to be on your comeback list?
I didn't even thought about that. Yes. Well, thank you. It's always good to have the show written.
Yes.
From this show. You know, it's a nice synergy.
Yeah.
And speaking of synergy, I have one of my absolute favorite CEOs on tonight, Hockman from Brinker.
Tesla recovering! Woo! And please don't be alarmed. It's just the Nike swoosh on AMD. Yes.
This thing propelled this company, by the way, number one on Twitter when he unveiled it, to over almost everybody. He's an promoting guy from Yum. He's really sensational. And that was when I realized the McDonald's stock was a big trouble.
This is where you mentioned margaritas.
Yes.
Why do they call the company Brinker?
Because Norm Brinker was one of the greatest restaurateurs in history.
Thank you. I didn't know that.
When I met him, oh my.
They should change it, though, at this point.
Okay, let me get on it.
The other thing that Santoli pointed out before the show this morning, Jim, is if you look at Chipotle year to date, you can almost see the day where McDonald's launched $5.
Yes, but that also, I mean, absolutely true. And that was also the controversy about size. Brian Nichols said the prices have, remember, the prices have gone up, but the size hasn't. All right. Now, a lot of people feel that there's been, David, a very big controversy about whether the sizes have gotten smaller.
I know.
And I continue to believe, other than the Guerrero problem for Chipotle, for avocado, when it comes to guac, I think it's a great company. But I've got to tell you, people really feel that there's just an undercurrent now that Chipotle, I think, is untrue. But you maybe got to get Jack Hartung, the CFO, because I think that the company's being slagged unfairly.
Not Brian Nichols. You wouldn't bring him
Oh
on?
no,
You'd rather bring on the CFO?
No, it's just that Jack's retiring. I want to salute him. I
But
love
not
Brian
for a
Nichols.
year, not for a while.
Till March.
Not till March of next year. Well, I just wanted to have an excuse to have Jack on. I love him.
There you go.
Okay,
It's
I
a
just love
booking
him.
strategy.
I love him. He's been terrific. And when the True North went during the really terrible airborne illness, and I was telling him because I owned a restaurant there by the grace of God, and I said, you will make a comeback. You will.
Folks, AMD is so cheap. I don't know how else I can put it. Okay, I actually wrote it on eHack as well. AMDizzle. Even though 50 PE, you have to remember the sucker's growing at 34%, which actually puts its peg for a chip designer at just 1.47, which is actually pretty dang low for a designer. Like, you'd probably expect the peg to be somewhere around 2.5 to 3 for a high margin designer. It's at 147. Wow, that was based on pricing like 2 days ago. I'm not updating the numbers. You could do it yourself. But anyway, just think about it. 34% growth. And if you want to write it down, that's on $3.50 of end year EPS. So, this acquisition, all it really does is serve, I mean, of course, like if you basically buy out an AI research team, yeah, I mean, sure, maybe you could design a chip that's better than Blackwell. That's great. But, I mean, that's what all these companies are, like NVIDIA and AMD, they're research firms. But as far as the, Wall Street waking up to AMD being a cheap AI play, I don't know. I mean, bought a bunch of AMD just the other day, too, in the fund I'm exposed to. It's kind of just put my money where the mouth is, I suppose. All right, let's see what else is happening. So, market's slipping a little bit as I think J-Pow's getting ready to come. Oh, no, not J-Pow. Yes, J-Pow. Anyway, so J-Pow will be on his way in like 2 minutes. Oh no, that's pretty boring. And spot gold's up 1%. See, it's the cash play. People are worried. People are worried about El Marquette. Lame, very lame. Nobody knows lame. Like J-Pow coming to tell us nothing again. Lame. Okay. What else is going on? I don't know what else is going on. Okay, let's change the channel here and see what's going on. Come here. Everyone's on commercial. Yeah, because they're all prepping for J-Powie to come wowie us. He's not going to wow us. Alright. I don't know. There's going to be another purple tie. He's going to read his statement. Oh, it'll be so boring. I wonder how many cups of coffee I can down this time. We'll see, I guess. Okay. Let's see. GME. Yep, going for now. You just need Omicron. It'll be bigger. Bitcoin really holding on to that shelf, Kevin Drew. Yeah, the market feels like it's just kind of like chill right now, waiting. Respectfully waiting for Powie Wowie. No. Apple. Look at this. What have you done? All right. Hey, look. It's Carl.
Day for the markets as Fed Chair Powell testifies for a second day in a row, this time before the House Financial Services Committee. We'll take Q&A live as it begins. Plus, David Faber joining us in just a moment for a first on CNBC interview you will not want to miss with the founder and CEO of Skydance, also Jerry Cardinal, the founder of Redbird Capital, talking their new deal with Paramount. It's going to be a big one. Quick check, though, on the markets ahead of Powell. We're a little bit higher again. The S&P is up about 1/3%. NASDAQ comp up 0.5% because tech is leading again today. That's pretty much been the story all week. It's AMD, On Semi, Microchip Technologies, Micron, NVIDIA, yes, higher again. Week to date, NVIDIA is up almost 6%. The 10-year Treasury note yield, well, there's buying of treasuries. We've got a big 10-year auction later today. That could be important. The yield below 4.3%. Wholesale trade numbers are just crossing the tape. Let's go to Rick Santelli with the numbers. Hi, Rick.
No, Tesla, red candle, what the hell?
On May final read on the inventories, the mid-month read was up 0.6%. It remains at up 0.6%. What is noteworthy there is that is the biggest inventory amount on a month-over-month basis, going all the way back to August of 22. And we know that inventories, of course, potentially are building. It all depends what type of demand it meets. On the sales side, this is a fresh number for May, up 0.6%. That follows up 0.1% so far unrevised. Up 0.6. Well, that is the strongest number going back to February when it was up 2%. So these numbers are better than expected. We see interest rates moving up just a bit, getting near unchanged on both 10s and 2s. And as Sarah pointed out, we had a solid 3-year note auction yesterday, but now we're moving to the longer maturities. 39 billion 10s at 1 Eastern, 22 billion 30-year bonds tomorrow at 1 Eastern. These are very important auctions, and even though demand has been better at recent auctions, it is definitely worth watching to see if we continue to support the notion that we could borrow at current interest rates while spending continues to move higher. Sarah, back to you.
And we will be watching that this afternoon. Rick, thank you. As we await day 2 of the Q&A with the Fed Chair, senior markets commentator Mike Santoli joins us here at Post 9 to break down the action. Mike, the Fed Chair yesterday, I don't think broke any new ground. He really stuck to script and said the exact thing that he said last week in Sintra, which is we're happy with the disinflationary progress, but we need to see a little bit more evidence, and we're not committing here to pinpointing any timing. I think it's, he also reiterated the message that we have to pay attention to both risks right now on the Fed. Inflation, but also the job side of the mandate. And I just want to play for you a quick soundbite of what he said on the labor market, which I think shows how the Fed is thinking about it right now.
The most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago.
So he characterized the labor market as still strong, but cooling considerably. And I just made for a chart just to show that, and we know the Fed pays attention to it, the job openings data, because what we saw is there were so many job openings coming out of that, the post-COVID. COVID, they dipped, obviously, and then coming out of there, you can see how elevated this number was. It got really high, and now it's come down pretty steadily. It's still above the pre-pandemic sort of normal levels, but that could be one chart besides the unemployment rate that they're watching.
Actually, and the number of job openings per unemployed person is basically back to normalized to pre-COVID levels. So I think he welcomes that news, and it implies to the market and to everybody else that they're not looking to engineer further additional weakness beyond what's already kind of in process at this point. That's pretty welcome. I think you can go back and remember when he was talking a lot about, we think the economy is going to have to be running below the normal rate, right? Essentially below trend for an extended period of time to get the inflation problem under control. This is a 2022 type of rhetoric even into last year. Well, that's kind of what's been happening. Right, the first half of this year, you're under 2% real growth, probably, on the past couple of quarters. So everything seems to be lining up. The market's welcoming this because we knew that the restrictive policy probably would take hold.
Powell should be up right now. I don't know, just yapping over here. Let me see what's going on. Oh, they're just getting ready. Boy, that looks boring. Yeah, look how boring that looks. Oh, there he is. Purple tie. Just getting ready for Papa Pow to destroy everything. Okay. Well, we'll wait here while they get that ready and listen in here.
Anyway, are up in arms about the manner in which we've gotten here. Breadth has been negative on a tremendous number of days when the S&P 500 has been been higher. Well, that's just an outgrowth of what we know, which is the math of 3 stocks for 21% of the S&P right now. And so I don't really see reason for alarm. I also don't see, though, the catalyst for everything changing on a dime and it becoming a broad rally. Even if we get a rate cut, I do think the earnings have to show up in a broader way, maybe by the fourth quarter, to try and justify some kind of a move like that.
I made one other one for you to illustrate the point, which is the tech versus transports, because Dow transports have really started breaking down, and that's a good cyclical read. Right, and investors are worried about growth. That's the bottom line.
It generally is a good cyclical read, but what's interesting about it is some of the weaker areas of the transports have been trucking, has been freight. There's been this very prolonged freight recession. Why? Because there was a massive buildup in freight capacity during COVID, and it's almost as if that's sort of subsidizing a lot of activity out there. The struggles in terms of freight rates, because there's so much more capacity, is helping on the inflation front. So I think that it's something that a lot of the indicators of cyclical momentum, as I mentioned, are not really lining up that well. And that's why it seems a little bit delicate that they have to do this handoff from restrictive policy to something a little bit easier.
The survey in the Deutsche Bank note, they surveyed a few hundred consumers today, I just thought was interesting as far as top risks. And inflation is still at the top of the list. But the second is government debt. Biggest economic risk in the next 2 years was the question. Government debt. We were just talking about that with Rick. We're going to see, we did see demand yesterday. We'll see if we get the demand for the 10 years today in the auction. But U.S. political instability. So this election fiscal risk is coming to the fore almost in a bigger way than monetary policy risk right now, as Fed Chair Powell has been very steady and very clear with what's coming next and what they need to see.
Yes. Okay, where are we with Powell? Is he talking yet? I think so.
More than 20% since President Biden took office, inflation remains top of mind for American families. In fact, only a quarter of Americans describe current economic conditions as good or excellent, according to the most recent data from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out of control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal, or an underanalyzed initial proposal. Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, and your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full.
This is so boring when they talk Basel all the time. This is how we got bingo yesterday. Basel, 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 Basel.
Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell.
Oh, here we go. Maxine. Here we go.
Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership.
Yes, it was Biden's leadership. Okay, I'm going to go to the bathroom really quick while I vomit.
By President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees, wiped out more than $144 billion in federal student loan debt for 14 million borrowers, and cut child poverty in half. President Biden is and will continue to advance policies that are providing good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it today. Project 2025 is authored by almost 24 former Trump White House staffers, and Trump administration officials. It was compiled and published by the ultra-far-right Heritage Foundation, whose CEO recently declared that they are, quote, in the process of a second American revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to and on January 6, 2020, it should. Project 2025 promotes radical ideas to materially undermine the Federal Reserve, if not effectively abolished. MAGA wants to put you out of a job, Chairman Powell. So I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back. I'd note for the records, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III Endgame proposal and its opaque regulatory approach. I yield.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic outcomes for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed. Well-calibrated monetary policy with fiscal support from the American Rescue Plan, the Infrastructure and Jobs Act, and the CHIPS and Science Act has powered strong job creation and low unemployment while staving off a recession that many thought inevitable, and far better, I should point out, than our peer countries. While Democrats are committed to supporting your efforts to cut costs for American families, I yield back.
Oh, yeah?
We'll now welcome the testimony of Jerome Powell, the 16th chair of the Federal Reserve Board of Governors. Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made a part of the record. You're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private Domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs to workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased.
He's pushing things red.
The market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We have also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation.
Yep.
The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps. for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make, what happens then? Like, walk through the mechanics as you anticipated.
Okay. So we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that, and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters another chance to comment.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right.
All right, so let's get into the question of balance sheet.
Yeah, Ryan, nothing's changed in the real estate industry. It's a sign you might not actually be out there on the street.
You stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go. And as I mentioned, and as you just mentioned, we've now slowed the pace really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand. And we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right. Thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really,
Here
no.
we go.
You've heard about it?
really don't focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
We do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that anyway, we certainly at the Fed do believe that the dual mandate has been a good thing, and it's enabled us to. It has not stopped us from controlling inflation when that was the thing that needed to be done.
And so, while of course I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and helped to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance. And we saw improvement with diversity and inclusion. Have you seen that?
There's no question. If you talk to CEOs, they get this. If you want to attract the best talent in our country now, you need to be committed to these things.
And so I would like to compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
Boring.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now recognized for 5 minutes.
Thank the Chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking forward to seeing the results of the quantitative impact study and the separate comment period, as well as an interagency agreement you referenced yesterday. Because of Dodd-Frank's role and the Vice Chair for Supervision, Vice Chairman Barr's role and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that subject to the court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that we want to reassert Article I authority over the direction that independent agencies work. Would it be fair to ask you to certify that because of this change in Chevron that the Fed would commit to promulgating new rules only if they're at the direction of an explicit congressional authorization?
So I think, first of all, we're studying that and several other decisions that have just come down in the last week or two. So I haven't got anything definitive for you on that. I think you know us to be an organization. I know us to be an organization that is strongly committed to the rule of law. Supreme Court says what the law is. We'll always do what we believe the law is.
Well, I'll submit that question maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
I think many of us certainly agree with that, and we know that when the deficit's at 3 times the economic growth rate and growing, it's of concern, and it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing is sort of a can't-miss opportunity for the Fed to demonstrate some humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which there have been very low interest rates, but also very low inflation, suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails. It's like we had this pandemic, and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to those concerns that we were in a world of very low interest rates all the time.
But now wouldn't you say we're in a very opposite situation where because of reshoring and tariffs and other policies that are quite inflationary?
I would say this. Those concerns are, right now we have the policy rate in the mid-5s, right? And we see the policy is restrictive, but clearly interest rates, the neutral interest rate must have moved up, at least in the short term. So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look forward to that.
How much of what we did in that time period is relevant to the new world where rates appear to be higher?
Gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman, and welcome, Chair Powell. It's great seeing you. Last time I saw you, we had the gracious pleasure of you visiting with me in my office, and we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your Vice Chair Barr made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement of your record. Now, let me ask you my question. It's simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a different thing, and of course we realize we have to adapt those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
Give us a little bit more information on the Basel III, because I worked with you with this. Our work goes all the way back to the Obama administration when we responded to that crisis with our banks. And you and I worked that up where we came up with the hardest hit program to help those who were suffering with, those states that were suffering with high unemployment and at the same time high home foreclosures. And we were successful. And we've established that program, and it's still going on and helping many of our states. But you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be at a disadvantage. Over in Canada.
Yeah, quick note. Look, so, market's a little playing sideways right now. You've got Tesla trying to get back to that 260 level. Can it hold? You've got AMD rolling down a little bit. BTC's not really coming up. A little bit of a downtrend on the Qs. Nvidia's trying to go up. That's about it. Apple's kind of slowed down a little bit. Tesla's really having trouble, by the way, at the 261-ish level. Although it's on an uptrend right now, trying to break out. So we'll see if it can. But yeah, I mean, do we think it'll close this way? I mean, hey, unless we get something bad, hopefully. But yeah, you could always hedge. Although hedges are a little expensive right now.
This proposal, Our banks are going to live with these rules for a long, long time. The main thing is to get it right, and that's
wrong one. There we go.
Finalizing this proposal. Our banks are going to live with these rules for a long, long time. The main thing is to get it right, and that's what we're doing.
Oh, I'll go over here. It's a little faster. There we go.
Great job. Keep up the good work.
We'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Mr. Chairman. Thank you very much, Chairman Powell, and also thank you for continuing to indicate that you will look at the entirety of the economy, the whole economy. I appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations, such as changes to capital requirements and lowering debit card interchange caps, could lead to new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel reproposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to repropose Basel III for comment period. Could you clarify if this means the proposal will be reproposed from scratch, and any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey, and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
You're asking me a kind of a political question there. I don't want to criticize a platform of economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data to support the so-called greedflation? This term greedflation somehow has caused inflation. Is there any data to support those comments?
So we look at it that this inflation has been caused by a combination of, very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening. And by the way, there was inflation all over the world at the same time. So these are some common factors. But at the same time, you had tremendous demand, for example, for automobiles. You had constrained supply because there weren't enough semiconductors, long story short. But, so that to us is what this inflation is all about. So we've observed, the sort of healing of the supply side at the same time, restrictive monetary policies weighing on demand, and we've seen inflation coming down.
So there's no data that supports that gouging of consumers is part of the inflation?
It's been very hard to track a connection with, earnings and things.
Yellen mentioned that she didn't feel that there was grocery price shock and that sort of thing. Groceries and gasoline are the two driving problems for American families and certainly my constituents.
Looking for some longer-term policy insights here. Not really getting any so far. It's just a lot of kind of political snapshots that they're going for.
A lot of things affect, let's take energy first. The energy prices are generally set at the global level. We do have some effect on that.
Sorry, Chairman, I've run out of time. Thank you. I yield back, Mr. Chairman.
Sorry, we can continue.
That's great, thanks.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. In some ways, I want to follow up or at least respond to the very civil but I think reason of why we need an independent central bank. And your response was, the question you raised would, if I answered it, it would be along some kind of a political avenue, and you didn't want to drive on that avenue. So I'm also very much concerned about a lot of the discussion. I've been on this committee a while, and so it comes up quite often. When the Federal Reserve was birthed around the turn of the century, I think, around 1913, 1918, somewhere like that, prior to the establishment of the central bank, was our country experiencing a lot of recessions because of no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what went on just went on. Is that relevant?
Yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Do you think that it is dangerous to blend monetary policy and fiscal policy?
To blend them?
Yes.
So we try to keep them very separate, and we try not to express views on fiscal policy that's for elected people who have undergone elections and won and make those very difficult decisions. We have a really specific, narrow but important mandate that you've given us, and we try to stick to that. And so we take your policies as given, and then we conduct monetary policy with that.
I don't want to draw you into any kind of a political response, but and I have not read all of this Project 2025 document. I read some of it online a couple of nights ago. But even whether it comes out of a 2025 or a 3089, whatever, one of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem. And eliminating the Federal Reserve, imposing economic policy on the Fed that does not come from within the Fed. I'm wondering here, would you agree with any of that I just stated, whether it came from me or Chairman McHenry or anybody else?
So I'll just say, first of all, we're certainly fair game for any criticism people have. I think what we've learned and what we know is that having an independent central bank is really essential. If you want to have high and volatile inflation, then the quickest road to that would be to undermine the independence of the central bank, of the Fed in our case. So I frankly think that view is very widely held. I find up here on Capitol Hill in both political parties. So
eliminating the Federal Reserve is best for promoting economic stability?
Yes.
Thank you. I knew that our chair, that the ranking member was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But I'm wondering, as we try to figure out how to deal with this issue. Oh my goodness, my time's
Was that a question?
I didn't finish it, but yes. If you knew where I was going, please.
Gentleman's time has expired. We'll now recognize the gentleman from New York, Mr. Garbarino.
Thank you, Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of those, the substance of those changes. I know you won't get into specifics. You said that. I just don't know how deep you won't get into them, but I just want to confirm what you said to my colleague, Mr. Muser. There will be, you're not reproposing some things, it's just going to be a partial reproposal?
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full, wide proposal.
So it's not a complete reproposal, just partial?
Yeah.
Can you get at least into, can you tell me which components you're?
You know, it's not until it's all agreed and ready to go and vetted. I'm reluctant to try to get into too many specifics, just because, you know, when you're doing these things, nothing is agreed until everything's agreed.
No, I understand. I'm not asking for what specifically your changes, which, if you're willing to say which.
I hope to be able to come to you with a really clear answer on that soon. I mean, I think we're ready to go at the Fed.
So that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Bloomberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together,
someone's got to be holding it up.
Well, you know, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Okay, can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the chair?
No, I think it's the board, and of course the comptroller is one person, but I think I mean, the FDIC can speak for themselves, but I do think their board would be the question.
Okay. One final question, timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation would then not occur until at least the beginning of 2026?
Again, I can't be that specific. And, you know, someone asked me, does it sound like the first quarter of next year might be? And I said, it might be. I mean, there's a range of times it would take. The thing is, as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly. You know, we want to get it right, listen to the comments, make sound decisions, and move ahead in a way that is, you know, gives us a sustainable set of rules that we won't have to come back and fix all the mistakes in.
Thank you. I want to move on to another topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other rules until people reach a place of understanding and acceptance of a revised Basel proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity
on the liquidity thing? I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question.
I thank my colleague. Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline, where we do have somewhat of an affordability crisis has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's being considered that would actually drive investment and give a clearer picture for investment and perhaps help in these two categories and, in the end, increase in supply so as we lower those prices?
So, honestly, when we think about our near-term rate moves, we're thinking about a couple things, and the first of which is we want to be more confident about inflation.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.
The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you again for this hearing, and the ranking member, thank you very much. Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time, right?
That's right.
So I thank you for your long public service to the nation. I think you've been outstanding. I think we all respect you deeply here. You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is, because sometimes when you're here, there's all sorts of cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy is doing all right.
That's pretty good.
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out, what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade of horribles that we were going to have a recession, maybe a depression. In fact, the country was going to fall apart. Did it?
No. We went through a period of high inflation as the other countries did. And, that's very challenging.
And in fact, isn't it the case that most of those countries had higher inflation than we did in Europe?
Over time, there were times when their inflation was higher. I think overall it was broadly comparable.
Yeah, in fact, I brought it up a number of times here because there was a whole bunch of those countries that had much higher inflation than we did.
Well, Europe was much harder hit with the energy issues coming out of the Ukraine war than we were.
Sure. I mean, there's a whole bunch of other issues to instability. They had political instability, and a whole bunch of other things, obviously. But, I mean, it is interesting today that, the parade of horribles that we hear doesn't seem to manifest itself with the media or the attention that you normally get. And that's good. I mean, I think it's a great thing. Now, I do want to ask a couple questions. I do have concerns, Basel III on housing. I think I've made those concerns known to your office, and I won't rehash them. But I do have issues that I want to talk to you about with regard to climate. Obviously, you said you don't read too much of the news. You didn't hear about Project 25. I don't think that's what you meant to say, and I don't want to put words in your mouth. I think when the ranking member asked you if you had heard about it, I think you said no. I think you've probably heard about it, but you haven't read it.
I've seen nothing more than headlines on it. I mean, I've devoted zero.
Yeah, me too. I don't read
energy
that.
into.
Yeah, I don't read that wacky stuff myself either, but I certainly read the headlines. But the reason I ask about the headlines is because you obviously have seen what's happened in Texas. You've seen what has happened with climate change. And in fact, you've testified, I think, before that you believe in climate change. Is that correct?
Sure.
Yeah. And so what are we doing? You've taken a number of steps, I think, that have been very positive to make sure that we look at the risks of climate change. Could you go over some of those? Because that does concern me. I think that's a change that we also didn't see. Well, I saw it coming. I've been saying it for a long time, but a lot of people didn't believe.
So, if you're looking at financial regulators, you're looking at people who have a very, very limited role in climate, and that is just to look at the institutions that we supervise and make sure that they understand and can manage the risks that they're running. That we are not climate policymakers.
Right. And I'm not asking
has to be elected people who do that.
Right, but you have to take a look at the risks. I mean, look at the risks that the insurance companies are taking, and the banks, of course, are financing these homes, and now you can't get insurance on them, so all of a sudden you can't rebuild. I mean, these are risks that the banks are looking at.
So we don't regulate insurance companies.
No, right, but you regulate the banks.
Banks, yeah.
And these banks have mortgages on those houses, do they not? Many of them.
Well, in many cases, they're not writing mortgages anymore. So that's the result we're getting, is that banks are saying, they see these risks.
Yeah.
They do.
My time's up, but thank you again. Appreciate you.
Thank you.
The gentlelady from California, Mrs. Kim, is recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being with us today. Gosh, you're under a lot of pressure from all sides to divert from our monetary policy goals. And I commend you for your leadership and staying focused on the core missions of the Fed, which are price stability and maximum employment. So thanks again for your leadership. And you have stated that it is the Fed's strong view that you will have to reopen the Basel III Endgame proposal for comment again. And I really urge FDIC and OCC moving forward with reopening the comment period. Chairman Powell, would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
Sorry, I didn't follow your question.
Would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
I mean, broad support empirically would mean, a good solid vote on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the broader community of commenters on all sides. That's what I meant by broad support.
Got it.
Yeah, that's what I meant by it.
Thank you. And as the Fed looks to enacting several changes to the proposal, I would also urge you not to overlook the Basel Endgame proposal would disproportionately impact FBOs and regional banks and U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. We've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed to have more transparency and better engagement and consistency with stress tests?
So we have increased transparency in the stress tests over time, and I would say we do. If people want to write articles and make comments that are critical of the stress tests, we're going to read those and we're going to think about that. We're open to improving it. We know that the stress test has to evolve over time if it's to remain relevant, and I think transparency is one of those subjects where we're prepared to listen and think about ideas.
Definitely. I would like to see more stress test regime that is more transparent and adapted, identifying unforeseen risks. So we can achieve that by being more collaborative, I believe. Yes. So I'm also interested to hear from you whether you and your fellow banking regulators have considered the cumulative impact of any new liquidity standards with the Basel III framework and the existing post-crisis liquidity requirements. So what industry engagement has the board staff held with respect to changes to the liquidity framework?
So we haven't actually made any proposals on that yet. We have had significant industry interaction on the proposals, and I mean we will move, I think, at some time this year.
What about the board staff? Have they conducted any industry-wide data collection to study the necessity for and the impact of any changes to the existing liquidity framework?
I think we've done a lot of investigation on that front, but I think that this is the beginning of the process, not the end. You know, we haven't published proposals yet. We're working on them, and it's a pretty early stage.
Thank you. Let me quickly talk about the inflation issue. We had a peak inflation rate of 9.1% in June 2022, and a lot has been talked about being a supply side issue and the demand shock from the opening economy. So can you elaborate how the expansion in the money supply and fiscal stimulus played a role in persistent inflation, and why is it so important to get to the 2% inflation rate goal right now?
So the inflation that arose here was a collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers. We had rates very low. You know, those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand and there was constrained supply. And what you got was inflation. And you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down, the Fed has been working on, with restrictive policy, on cooling demand. That has been working. And the supply side has been healing. And the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality is a critical part of the Fed's dual mandate. When everyone in our community doesn't have the opportunity to contribute to their fullest potential, the economy is not firing on all cylinders. Nowhere is this more apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta. Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals. But we have to make sure that programs designed to serve unbanked and underbanked individuals in marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
This is pretty boring.
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed rule. And, we very much understand the concerns that are being raised. In terms of people where we don't have comment letters, we try to be thoughtful about the impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The bank-owned initiative has certainly played an important role in this progress. Bank-owned certified accounts are available to more than 95% of low and moderate income households across all 50 states. Access to low or no-cost banking services is a door to financial inclusion and wealth generation for marginalized families. As written, Reg 2 could undo some of the enormous progress made in the past several years. Chair Powell, how can regulators work with members of this committee to ensure that future proposed rules do not hinder Americans' access to tools that enhance the federal...
Yeah, all right, I'm tired of this rules crap. Hey, look, I don't think anything's going to change here. Quick other note. I got 4 swing trades going right now, and if you want any alerts on the swing trades I'm doing into August and October, make sure you join Stocks and Psych. You know the drill, meetkevin.com. Price is going up again on Friday. Keep adding value so the price goes up over time. And you have a price guarantee, so that way it can't be any lower than what you paid. And hence the price keeps going up over time. But anyway, do check it out, meetkevin.com. If you have questions, email us at staff@meetkevin.com. I am too tired to keep watching this because it's extremely unexhilarating and boring. So good luck out there. Hopefully you made some money today. I made some money on AMD and Apple. Those were good. Yeah, now it's, looking backwards is one thing. Now it's time to look forward. What is the next move? That's the big question. Anyway, good luck out there today. Hope you make lots of money. Thank you so much for watching. Love you coming out here. Not financial advice, not a market maker. Read disclosures. I don't know. There weren't any paid promotions in this one. I don't really even want to read the disclaimer. I just want to go. All right. Love y'all. Thank you so much. Oh, thank you for saying Stocks and Psychs changed the game. Appreciate it. Yeah, it's all about Psych. All right, let's get to the course live, folks. We'll see you there. Bye.